So you might be securing profit along the way here, take profit, see it extend. Now look at this base. Now it's basing, the EMAs are catching up. So you've already expected this to happen. You secured some profit, moved your stop loss up. You're looking at the base. So channels gets nice and flat. And as you know, that's the step that we're already looking for. So it's going to base. And right here is another make or break decision that you could either add to your long position, secure profit on an intraday move, or just scalp the upcoming breakout. So as it goes forward, you'll see that bases. And again, you can work your way down. See, this might not be enough of a move for you to take advantage of, but you'll see as it bases on a smaller time frame, and it's holding one of the critical components here is that it holds your EMAs. So all we're looking for is not for it to break back down across the EMAs yet, but we want it to hold and consolidate. So it's going to hold. And then right here, you could have entered or added to your position for another leg up. That's the base and break. Now we're moving higher. And again, on this base and break, you're going to want to start securing profit or adding to your position, averaging down, whatever, depending on if you're scalping or day trading. That's because you know what's coming up next after you've watched this video is the EMA crossback stage. So it's going to cross back over the EMAs. As the EMAs get tighter together, you can see this, and then it corresponds pretty perfectly with the chart here. So it's going to cross back under. Again, you might have already secured profit up here. If you're a day trader, you already want to get out, but since you're playing the same stock, you're watching for this base. And if it holds, it cracks back under the EMAs and then reclaims them. So again, you could be looking for that crossback on a smaller time frame to get a superior entry at a lower premium and maybe take advantage of a larger move. And your crosses will be identified on your smaller time frames, but you expected an EMA crossback. So once it overtakes it again, you could take the pop and it's likely going to wedge again. So see how this is a more macro scale of the whole move, but it takes place on smaller time frames. So as it breaks again and crosses back over the EMAs here at maybe your break, that's the crossover. You could see that it restarted. You could see that it restarted the whole move of the wedge pop and cross back over from our first entry from the bottom. So look, it's wedging again into the cross back. So we know from our 15, if we want to take advantage of this big move, we take the cross back. So once it breaks the wedge, you get in, have the 9 EMA as your stop loss. And then just as it did, it popped, crossed back the EMAs, and then it bases. So since we know what's going to happen, we anticipate the base. It breaks the base once more here. You could take another position if you want. Grab the calls, sell them at the top. And then obviously you want to secure because you know what's happening next. Like clockwork, it's going to do the EMA crossback. So once it bases and breaks, once it pops, you expect the base and break again. We take it. Overall trend is still holding because of our original base and break, bouncing, 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 bouncing. So maybe we have already exited our position here, but we're going to look for it to continue the upside because this EMA crossback was anticipated and it's not being held. So right here, you see it bounce on your initial base trend line. You look for the bounce, and then you're waiting for the EMA crossover again. So you might want to get in on an earlier entry here. Once you see this 5-minute candle coming up, you think it's coming close. Look on the smaller time frame for the corresponding flag, which even before I zoomed in, bam, it's already there. There's your wedge. Again, look how it just trickles down from the larger time frame to the smaller time frame. So it's all three charts are following the same movement pattern, but your entries and exits can be timed on smaller time frames if the smaller time frame is already experiencing the step that you're anticipating coming next on your larger time frame. Does that make sense? Like, I know it based right here and it crossed back, but if I think it's still going to hold the trend, I'm seeing, okay, it held the line. Now what's happening inside of this candle? All right, it's wedging again, it's flagging. So at the flag, we get the EMA crossback. Now we can enter a position in here again, and then use the 8 EMA as our hold for our stop, take it all the way back up. And now we've completed the full cycle from the bottom to the top. It's a full retracement. And now up here, we have what's called our extension exhaustion, and we catch it on the way down.